Hello and welcome to the third season of CNBC-TV18.com presents The Making in association with HSBC. Now, today's episode focuses on inclusive banking and microfinance and the role that they play as enablers in sustainable and inclusive India. Now, 7 of the 17 SDGs highlight financial inclusion as a key enabler to alleviating poverty and driving sustainability. Facilitating access to financial services and products for the underserved is imperative to curb inequalities and build more resilient societies. Microfinance or microcredit is one of the economic tools that provides small loans and other financial services to low income households. Indian MFI has witnessed a phenomenal growth over the past 2 decades despite several disruptions. Now, today, microcredit is delivered through 197 lenders, disbursing around 2.3 lakh crore rupees to beneficiaries spread across 628 districts across 37 states and union territories. Given that MFI is the harbinger of inclusive and sustainable growth, supporting the growth of these institutions is of paramount importance for India. For financial investments, conducive regulatory framework, and infrastructure development are three enablers that guarantee the expansion and the sustenance of the microfinance landscape. Well, to talk more about the drivers of inclusive banking in India, we have the key stakeholders themselves joining me for this very important conversation today. Rajat Verma, the Managing Director and Head Commercial Banking at HSBC India, Umesh Revankar, CEO and MD at Shriram Transport Finance, Uday Kumar Heber, the Managing Director and Chief Executive Officer at CA Grameen. Gentlemen, thanks very much for joining us here on this conversation. Let me start with you, Mr. Heber. As I pointed out, the microfinance story in India is not new. It has been an almost 2-decade-long journey, and it's been a journey that has seen many developments, many twists and turns. As you stand in 2022 today and look at the way the landscape has evolved, has changed, the consolidation that's taken place within this space, take us through the journey so far, but more importantly, what the runway ahead looks like.
Yeah, I think, thank you. Pleasure to be here, Shereen. Microfinance has been here since last 2 decades, and as a basic business model, this worked as a social business, providing credit to the bottom of pyramid through doorstep delivery process. It has been a great journey in the last 2 decades, but particularly in the last 1 decade after regulator intervened and started getting into building a proper regulation. Probably India is today one among the best facilitator for the microfinance business, with credit bureau in place, regulation in place, lending mechanism through PSL lending is in place, and then the self-regulatory body in place. I think nowhere in the world this kind of facilitation is available for microfinance business. That's why probably today, market leader in terms of microfinance in India, with 3 trillion rupee in terms of sector AUM. So I think it's one of the best. So over the years, again, regulator facilitated the MFIs to become banks. 9 of them become banks, 1 become universal bank. I think this kind of facilitation is not there. Top of that, looking at the maturity of the business, regulator came back and again and given more flexibility today with the new regulation, which is again plus point for microfinance, playing as a one common business for every player. I think this kind of facilitation, this kind of infrastructure and support system probably helped this to grow as a mature industry today, there's a huge highway to grow, considering that almost 160 million households are underserved or unserved by the banking, and only 60 million of them are accessing microfinance today. That means 90 to 100 million of households which are low income, lack of access to credit, are yet to get the credit. That itself creates a huge runway for this microfinance business, owing to the nature of this business and non-availability of form of finance in the rural India. I think rural India is a bet for microfinance, and definitely there's a huge highway and a huge potential for this business.
Mr. Revankar, let me address that issue with you as well. challenges that the sector has had to overcome, it is poised for further growth. And as per Mr. Heber, poised for significant growth from where we currently find ourselves. I want to understand from you, what has been the perspective that you have adopted, and more importantly, from a future standpoint, to support the enablers that we just spoke of. What's your outlook as far as the MFI space is concerned, and the challenge of bridging the access deficit of serving the underserved?
Yeah, thank you, Sharon. See, basically, what happens is a customer or a entrepreneur or a individual, when he wants to make a sustainable income, he has a different uh, business models he adopts. It could be a shop, it could be a vegetable, it could be a fruit vendor, or it could be acquisition of a particular business activity, or maybe asset. Now, what we have done is focus on acquisition of assets. Initially, it is a vehicle, then tractor, or it could be a construction equipment. All these equipments or vehicles require some kind of a skill sets to be developed initially to operate these machinery or vehicles. Once he understands how to operate, then there is a income generated out of these vehicles or machinery, or even a business or shop. So once a sustainable income is established, then it is easy for a person or family to grow their business. They can add more equipment, they can add more businesses around their known skills, what they have built. So it gives them a long-term sustainable income. So not only the person who starts the business, it is the peer pressure that creates a bigger sustainable income for the entire family. So I feel over the 20-25 years, as the rural and semi-urban and urban has got integrated because of the better road work, a better road network, and a better commerce between these cities, there has been a flow of business move. People also have been migrating from one place to another place. There
Yeah.
has been a sustainable business that creates momentum.
India's biggest leadership summit is back for envisioning a new tomorrow with eminent global leaders on a digital-first platform. This is the Hindustan Times Leadership Summit from 8th to 12th November 2022. Register now. Experience, engage, express.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations, meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. This is the news you need to know now. News with real-time influence. From new space policies to the global energy crisis. From COVID-19 to India's stance at the WTO. Politics from Ukraine to Maharashtra. From key GST changes to Agnipath protests. From Elon Musk's Twitter bid to rising Indian unicorns. This is the next generation of news, with newsmakers who shape the world. Insights, opinions, influencers, seasoned journalists. This is not the same news you see everywhere, because the world is changing and the news is too. We make your news our business every second of every day. This is news on CNBC-TV18. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBC-TV18.com.
Powered by LIC. हर पल आपके साथ.
Rajat, I want you to build on what we just heard there from both Mr. Revankar as well as Mr. Heber. The impact of a deeper penetration of microfinance, of microcredit, as well as the highway for growth that both of them have spoken of. One of the key enablers has, of course, been the digital infrastructure, which has made a lot of this possible now, which has really bolstered the inclusion, the financial inclusion story. How are you reading this 2-decade-long journey? And more importantly, what lies ahead?
Thank you, Shereen. You're absolutely right. In fact, microfinance, I would trace it back to Seva Bank and Ila Ben back in 1983, I think it was. So clearly it's come a long way, and the last decade have been very important for it. But obviously technology has had a really important part to play in the growth in the recent past, as has the Credit Bureau and the organization of the industry, the regulatory framework and all of that. But I think looking forward, some of the building blocks for the stack are already there.
Yeah.
But you need to develop that stack into something different, in the sense that a lot of information that you could get for a MSME, perhaps, which can work with OCEN, may or may not work with microfinance, because the level of information that you might have available that you can take a decision on will perhaps be insufficient to be more knowledgeable about that client. So I think to some extent, the question that you raised of Udaya, and Udaya, I mean, my view is that outside in, Udaya is the expert on this, is that this is a social business. He used the term social business, right? So ultimately, this industry will be gauged not only by the financial success that it gets and the strength, etc., that it grows, but whether the 6 crore individual borrowers in microfinance become 12 crores or 18 crores, and that's when the coverage will happen. And to some extent, whilst the building blocks of UPI, etc., are there, I think it, in some ways, you do need a reinvention of technology, of the way that credit can be delivered. Because intuitively, I feel that some of the benefits, the first order benefits, maybe even the second order benefits of all the steps that we've mentioned several times before, may have already come. So I'm really happy to hear Udaya say that 14% customer growth can happen for the next 3 or 4 or 5 years. But at some point, you reach a point where it gets more difficult. The distribution becomes more difficult. So clearly, technology will have to evolve with that, Shereen. So if you think of it 5 or 6 years back, I think the technology that we use today to open accounts, to deliver loans, to collect cash is is unthinkable, is unimaginable. The level of frictional costs that have been saved and the efficiency that has been brought in. But you need further evolution of that technology for it to reach the the more the even more difficult portion of the population that is so required.
Rajat, I want to understand from you, from a bank's perspective like yours, what more can you do? You've got a partnership, for instance, with ADB. How do you support the on-lending finances of this sector? What's the role that you believe that commercial banks like yours can play in this space, in this sector?
I think this is a money business, Shereen. So fundamentally, we've worked with both the gentlemen on the screen for more than a decade now. And as a foreign bank in this country, our branch distribution wouldn't allow us to do the things that they are able to do. Financial inclusion is an important objective for us as well. But the best way, the most sensible, the smartest way for us to achieve that is through the people who are most efficient at delivering it to the segment of society. So I can recollect going back more than a decade that we started to do not only on lending, but we started to purchase portfolios from Shriram, for instance. The other opportunities that we saw was to diversify. See, given that it's a money business, you have to diversify your source of funds, which was primarily Indian commercial banks. And with many companies in this industry, our pitch has been that, look, you must go overseas. Doesn't matter if the cost is plus or minus 50 basis points. You have to diversify because this is your raw material, right? It's just technology and money and your mind power that will drive these. And I don't know in which order you want to put them. In certain times like COVID, you probably put money, the funding or liquidity ahead of all other things. So it's really important to diversify the sources of capital. And, Uday has announced a recent transaction with a DFI for very long-term funding. And Umesh has done several such transactions in the past. So those are very important things that banks need to work with this industry to be able to deliver. So, of course, it's your own balance sheet, but it's also the partnership to be able to find other pools of capital. Because at the end of the day, capital is not infinite. It has various means of getting deployed. And it's certainly not surplus in this industry. And this industry it's growing so fast that it is burning so much of capital. I mean, you see every time I see the capital adequacy of a microfinance company goes to 30 and comes down to 20 within the year. So again, they need capital. So banks have a really important role to be not just lenders, but to be partners in this growth. And of course, then there's this other angle of transaction banking and supporting the collection and the payments, which we do as well. So that increasingly is an important role that we play with this industry as well.
Mr. Heber, I'll start by asking you, how are you building in resilience to deal with the downturns, to deal with the uncertainties?
Yes, absolutely. This is very, very important. Probably we demonstrated it multiple times, despite there are many difficult situations we faced in the last couple of years. The clear way, one is having the loyalty of the customers, most important in this business, as well as the employee centricity and an employee loyalty to build, which is most important to manage the uncertainties. Why? Because once you have a right product suitable to customer, process suitable to customer, as well as pricing suitability, customer will stay with you. Longer the customer stay with you will build the loyalty, and they prefer you to do transactions. So today we are able to, in the last 6 years continuously, we're able to retain 85% of our customers, which is the maximum highest in this industry. Similarly, our growth comes, at least 60 to 65% of our growth comes from our existing customer, which means I grow 65% of my portfolio without having acquisition cost. So which reduces my cost of operation, which reduces my risk to customer, which increases the revenue per customer. So which makes a very resilient business model for me. Similarly, from the asset side, similarly the employee side, you need to have a right kind of employees to serve this kind of customers, align with the ethos of the company. Therefore, we hire only freshers and train them to the for our needs, so that for almost 97% of our employees, we are the first employer. We recruit freshers, recruit from rural, recruit from the customer segment, their own family members, and then train them. They're able to empathize well with the customers because they come from the same set of families. So now, which helped us to build the typical empathy to our customers, and then work with them to ensure the resilient factor. And the third important factor is the resiliency in our liabilities. You need to have a right liability, diversified, stable, long term, and then positive ALM. This is very, very important. Banks like HSBC or many of the international banks helping us to diversify our funds beyond borders, not just in India. Almost 10 to 12% of our funds are in outside India, which we are planning to take it to 20-30% in the next 2-3 years, which will help us to diversification of stable funds. Having the right mix of the liability and the right mix of the asset, which actually makes us more sustainable and resilient.
Mr. Revankar, the top 3 things that you are doing to build in resilience?
Yeah, I think I'll allude to what Mr. Hebar has already said. It's building when you recruit people, giving them, making them part of the culture, because you have a culture in our nation. We are a 4-decade-old company, and the second thing is understanding the community which they are serving, because most of these businesses, whether it's a farmer or a commercial vehicle owner, they're all in a difficult, tough businesses. So understanding them, dealing with them, and empathizing with them, that's very, very important to be successful in the collection or building a long-term, long-lasting relationship. So we give focus on the training and skill sets that's required to build business for, that's one. And on the technology part, we are always focused in the sense we want the customer to be on par with us as far as technology is concerned. If I'm able to get a customer introduced into digital mode through mobile or through some internet access, then it is more convenient for customer and for us both to reduce the time taken to complete a transaction or even a remote transaction. So we are trying to bring the customer on digital mode as much as possible. Much before the demonetization, we had the option of the customer to pay through digital mode, and that's how we have now nearly 40% of our customer use digital mode to make the payment. So that reduces time. And the third resilience I feel is the upgrading the customer, giving him a knowledge of various business opportunity, and keep him abreast of the new development in the business and scope, because India is going to become a logistical hub for the Asia or maybe to the world, and giving him adequate knowledge on these kind of development that's happening is very important for us. So we keep having engagement with the customer on the new development that are coming, including the electric vehicle or the option of CNG. What is going to be the future for them when the vehicle, the kind of equipment or machinery they're operating is going to change? How to build a sustainable model?
The loyalty of the customers, the touch and feel. It seems that this is a very large mass of customers who you don't know, but that's not the case actually in the models of both of these companies. I'm well aware of the touch that is there at the last mile, the like in Sriram's case, the inspection of the vehicle, and all of those things really go down. The repeat customers that keep coming back and the loyalty, that's really what drives the resilience during tough times. We've been tested 3 or 4 times in the last decade, and in each test the sectors have come out very well. And true to my trade, I can't not talk about capital. I think that's the third part of the resiliency. It's been spoken, whether it's the diversification of liquidity. It's really important, and the companies do realize this, to diversify, to have different pools of capital, and to have pools of capital which are stable and longer term. And you cannot overemphasize the importance of that.
Well, yes, I would imagine that that is an important aspect that these gentlemen, as well as this sector, will have to consider as they try and achieve and realize the growth aspirations that they've set out. But Mr. Heber, Mr. Revankar, and Rajat, many thanks for joining us here on The Making to take us through where the microfinance sector in India is currently poised, and more importantly, the kind of growth that it can achieve going forward. Appreciate your time. We wish you the very best of luck. That's it then on this edition of The Making. From all of us here at CNBC TV 18, many thanks for watching.
Get up close